Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I'm Yatin, Mota, and welcome to this Moneycontrol live broadcast.
Well, Yatin, the mood has been soured, and you have global cues to blame for that. You saw a 6% cut coming in on the Japanese markets today, and even overnight, of course, we saw steep losses coming in on Wall Street. Yatin, the Nasdaq slid over 2.5% on the back of earnings disappointment from the likes of Intel and Amazon. And if futures are anything to go by, Yatin, Nasdaq futures are once again down 2%. So looks like the sell-off is going to continue into today's session on Wall Street. And of course, our markets weren't spared either. Yesterday, we were celebrating 25,000, Yatin, and today the mood has been soured because as much as 5 lakh crore rupees have been wiped out from the market capitalization. Nifty is down 1%, in excess of 1%. 24,800 has been violated on the downside. 24,700 although is holding out. Sensex down almost 890 points. So 900 point cut coming in on the Sensex as well. Yesterday it hit 82,000. Today it's below that 81,000 mark as well. Mid and small cap indices were in the red as well, but they did relatively better than the benchmarks today. Advanced decline ratio in favor of losers, 2:3, that's the advanced decline ratio. But I think big cuts on some sectors like autos, metals, Realty, if you look at that index, I think down 4%. Only Pharma, that was one pocket that came to the rescue today. Somewhat, 0.6% or 0.5% gains coming in on the Pharma index. In terms of individual movers, just want to see which were the stocks that were, the big losers today. Most of them from the auto pack. Eicher, Maruti, Tata Motors, all of these were the top laggards, and from the metal pack, Hindalco was deep in the red, and so was Wipro from the IT pack. And in terms of gainers, you had the likes of Divi's Lab, HDFC Bank, Dr. Reddy's, Sun Pharma, and some of the private banking names held out. Surprisingly, Yatin, HDFC Bank and
yes.
Kotak Bank as
so
well.
I think 2-3 things, Nandita. First, though, the auto numbers were not that great on a monthly basis. Most of the auto players reported numbers which were below expectations. When it comes to stocks like Tata Motors, their commentary also was slightly weak.
That's
when it comes to other stocks like Humans, which were top losers, the parent cut guidance, and they probably saw slower sales in regions like India. That was the reason why the stock was down 7-8%. But yes, a lot of stocks and a lot of earnings which in the large cap space had an impact on stocks.
That's true, Yatin, but there were standout winners as well. Let's not forget Zomato.
Correct.
It rallied as much as 19%, right? And all the new age stocks also saw a very good action today. Take us through some of the movers and shakers.
So Zomato, obviously I'll talk about it in detail, but yes, the stock went up 18% intraday higher to hit that 2.5 lakh crore market capitalization on the back of better guidance. Adani Wilmar, and remember Nandita, yesterday Adani Enterprises announced the demerger of the FMCG business, and they'll issue shares of Adani Wilmar in lieu of Adani Enterprises. Probably that helps them, do away with the overall structure of, the shareholding adjustment, because promoters together held 87% in Adani Wilmar, including the Adani Group. But with this restructuring, the promoter shareholding will fall to 76, which means less number of OFS shares, if at all, to comply with the minimum public shareholding norms. Philip Carbon Black, what a dream run it is. Nandita, you highlighted the stock, and post that the stock is also moving. Today, another 10% higher for that one. Humans, we discuss. Escorts, Birlasoft, all of these stocks reacting to the numbers. Birlasoft, obviously, the numbers were not that great. Margins were under pressure. Negative CC growth for the quarter, and probably for the last 2-3 days, the stock is under pressure.
That's true, Yatin. Quite a few of the movers and shakers from the broader end of the market. Some had a great day, and of course, most of them had a down day. But on that note, let's take a look at the stocks that are on our radar this afternoon, starting with Tata Motors, of course, one of the big laggards today on the index. I think it lost somewhere around 5% or thereabouts, if I'm not mistaken. Of course, the numbers weren't all that bad. Numbers were good, but it was the commentary that has got the street worried. Management commentary on JLR particularly was worrisome, given the fact that they've said that they could see lower production in Q2 and Q3 because of some planned maintenance shutdowns, right? Although guidance has been maintained, some brokerages have taken note of that, but they've also highlighted that there's some bit of exhaustion when it comes to the JLR order book, and on a high base, there could be some slowdown in ordering activity also going forward. So that's a cause for worry. But if you look at the quarterly performance, so to say, On a YOY basis, profit was good, 70% jump, revenue rose 6%, CV revenues also rose 5% or thereabouts, but passenger vehicle end of the business, Yatin, was muted. Aside of the commentary on JLR production, the management also said that the demerger of passenger vehicle and commercial vehicle businesses has got the board approval. That's the next big trigger to watch out for, because that will unlock a lot of value when it comes to the commercial vehicle business. And the demerger, the management has said, will take somewhere around 12 to 15 months, and the management is also confident of becoming net debt free this year itself. Let's see what the brokerages have really said, how they have viewed these numbers. UBS has maintained its sell call. Target price is at 825 rupees, which is much below the, where the stock is at right now. They have noted that the CV business was strong, but passenger vehicle business remains weak, and JLR remains largely mixed. And UBS also expects modest expansion in JLR margins in FY24 to FY26. They've flagged off the order book exhaustion that I was talking about. Jefferies has, however, maintained its buy rating. They have raised the target price to 1330 rupees vis-a-vis 1250 earlier. They've pointed out that while the demand for commercial and passenger vehicles in India has slowed down, the profitability of the CV business is improving, and the company has also got a new SUV launch lined up, Yatin, in the month of August itself. CV profitability improving, and the new launch in the new SUV launch will be something to watch out for. And lastly, Nomura has a buy rating. Target price has been raised to 1303 rupees. And they have also said that the company will go from a net debt of 1860 crore rupees to net cash of 145 rupees per share by FY27. So all in all, numbers were okay, good, but the commentary has got the street worried, and some of the brokerages are still positive, but UBS, I think, is the one that is fairly negative on Tata Motors.
Yes, and Tata Motors, the guidance relating to the domestic market, especially the PV segment and the electric vehicle segment, has not been great. Probably some improvement expected in the second half. But today, the stock of the day clearly is Zomato. 2.5 lakh crore market cap is what I'm telling you since the start of the show, that was hit in early trade. Obviously, the stock came off from those levels, but still ended 12% higher. Now, why this 12% gain for the stock of Zomato, despite the fact that we have seen a huge run up for the stock, is that the guidance on Blinkit store addition was increased substantially. In fact, it was almost increased by 50%. Now, Blinkit now is planning to reach 2,000 stores by December 26 versus their earlier guidance of 1,500 stores. Now, the best part about Blinkit is that the management sees exponential growth in this segment. Obviously, the shadow stores which are operated across the country have seen a strong set of sales volume pickup, from electronics to bread to whatever you name in grocery is available, and that has seen some substantial pickup. Now, if you look at CLSA, they have increased the target price on Zomato by 41% to a new level of 350. They have also raised the FY27 estimates of earnings by 36%. Obviously, this is on the back of better assumptions and profitability of Blinkit. And remember, the management has said the store addition will be, on a very fast pace, and despite that, the profitability will be taken care of. So it's not that they will be aggressively adding stores and not focusing on profitability. They'll focus on both segments. Probably that is the thing with the market liked. Jefferies also has a buy call with a target of 275. They also say that the Blinkit matrix was much better than expectations, with margins improving much better on a sequential basis versus the expectations.
Right. Also want to mention that Info Edge, that has a 13.5% stake in Zomato, Yatin, the valuation of that is in excess of 30,000 crore. In fact, Info Edge itself hit a fresh 52-week high in today's session. But the other big one, on my watch list today is SBI, because it will be reporting numbers tomorrow, Yatin. And so far, banking numbers haven't been all that encouraging. We've seen stock prices react to that as well. SBI will be the big one to watch out for. And here as well, deposit growth is likely to be slower than the system growth. Advances growth could remain healthy, but margins, of course, is likely to come under pressure, as has been the case with most of the banks. On a YY basis, margin pressure will be seen, but there could be some improvement on a sequential basis. High operating expenses, I think that's also been a cause of concern for banks. That could weigh on profitability for SBI. Slippage is also expected to rise on a sequential basis because of some seasonal effect. Aside of that, recovery and upgrades are also likely to be lower. But asset quality, that has been stable for most of the banks, and for SBI also, it is likely to either remain stable or improve. Commentary on growth, unsecured loans and future margin trajectory is something that the street will be watching out for. And in terms of the poll, net interest income is seen higher by almost 9% and profit is seen rising by 1.5%. That's according to the CNBC TV 18 poll. So of course that's one big number to watch out for, and that will be the stock in focus in Monday's trading session, Yatin.
Absolutely, and tomorrow SBI comes out with earnings around 2:30 is the press conference, so we'll watch out for that one. Big number, and probably this is one stock which will make or break the Nifty and the Bank Nifty both on Monday. So watch out for that one. Analysis obviously will be available on the Moneycontrol's website.
Right, Yatin, I also want to speak about a big IPO that has opened up, and you also spoke to the management. Take us through the management takeaways in just a bit. I want to just highlight that the IPO of Ola Electric has kicked off today for subscription. Closes on the 6th of August. It's a big one because it's from the startup universe that was really being watched out for. Price band has been set at 72 to 76 rupees per share. The company raised 2,700 from anchor investors and some marquee names also invested. But the subscription figures, just want to take you through the subscription figures. Till about 1:15 p.m. The IPO was subscribed somewhere around 23%. The QIB portion was yet to see some subscription. The NII portion was subscribed 10%. The retail end, Yatin, was already subscribed one time, and the employee portion was subscribed 3.7 times already. But some key risks to highlight about this IPO is that the company has been making consistent losses for the last 3 years. Attrition rate is also pretty high, so that kind of raises concerns about the culture at the company. And aside of that, it has also been giving steep discounts on its products, right, somewhere around 25,000 rupees or so. So that could change, and if they are forced to roll back those discounts, that could also impact demand. So these are some of the key risks where Ola Electric is concerned. But you spoke to the management earlier this week, right? Any takeaways from what they had to say?
So they said that discounts will stay, given the fact that there is competition. There is no structural change in that, but I think they are starting manufacturing of their overall battery ecosystem. They'll start manufacturing not only batteries but a lot of products in-house. That will get down the cost, and as soon as there is a huge amount of tailwind to the sales growth, probably that will aid the overall margins. So it's probably a scale game, and remember they have won PLIs for the battery manufacturing. That helps them get down cost. And most importantly, I think the overall value proposition is that since the FAME 2 subsidy is getting phased out, of FAME 3, probably the competition also is forced to hike prices or probably get it to a level where it doesn't hurt the bottom line anymore. I think this is a typical story. Currently a loss-making company, but probably the path to profitability, if they are able to achieve that, I think this could be a rewarding, kind of stock. 46% kind of market share in the two-wheeler space is what they command on the electric side, not the overall two-wheeler market share, but the electric market share is almost 46%, and the second best is for TVS Motors, which is close to 14%. So they are much bigger than the second largest player, having scale, and probably if they are able to get down the cost, especially on the battery front and on the assembly front, they could be profitable in the very short term.
Okay, of course, that will be watched out for, the path to profitability, as was being watched out for all the other new age companies that had also listed, right? That was a cause of concern. But see how Zomato has really come up, and it's reaching rich benefits for its shareholders. But of course, I think with that we've come to the end of this edition of Closing Bell. Lots to digest on Monday. Numbers from SBI, then of course this Ola Electric IPO will also be open. So we'll see how the subscription really pans out going forward. And of course, global markets, what transpires in the US market today will be watched out for, because we have the all important jobs data, monthly jobs data, that will be coming out later tonight. But with that, it's a goodbye from me and Yatin. Have a great weekend and come back and join us again on Monday morning on Opening Bell, and rest it out and have a great weekend. Thanks a lot for watching.